Well, good evening, everybody. Thank you for joining us for a webinar on dental practices and buying a practice in today's dental market. Um, our agenda tonight will be basically to kind of go over some uh, points of view from buying a practice, what you need to be looking at, and also from the financing element from Bank of America. We've got Matt Croker joining us. Good evening, Matt.
Good evening, everybody.
Um, any questions we'll answer at the end of the webinar. Feel free to put them in the chat as we go through. We know it's been a long day for most of you. We're going to try to make this a little shorter than most of our seminar buyers seminars that are probably 2 to 3 hours in length. Um, so tonight it's going to be probably more of an overview, cursory of a number of things that we go over in those presentations. A little bit about Omni Practice Group. They've been around since 2004, started by Rod Johnston. Um, got over, I think that slide is a little old, need to update it, but I think there's probably over 600 practices that we've sold, 1,000 practice valuations, and we've got a diverse team of dentists, CPAs, MBAs that and dental industry experts that are part of our broker team and covering pretty much brokers in 13 states, covering a majority of the United States with the hands-on and personal services. One of the features that Omni provides typically to sellers that are looking to transition and get a plan to transition out of their office. Why should you own a dental practice? Well, that's why you're here tonight. Practice owners make 20 to 25% more than associates. They build equity, which can be used for retirement. And then it gives you the freedom to practice how you want, the staff you want to hire, and provides total control for your future. Again, I say that because back when we had COVID, the first employees to go out of the practice were associates when practices started to shut down, and it left a lot of associates at that point going, boy, I want more control over my future. The other part is to own your own practice. It's cool. You kind of in control of your own destiny. Where do you find practices for sale? Well, practice broker listings. 60% of practices are sold through brokers. There's a number of different brokers in Colorado, and also in other states. You can look for those listings that those brokerage firms have. You can see a list of different available practices with those brokers. Um, there's also one of the things mentioned with listings is um, that you could find some of those with um, your associations. Associates don't be careful. Um, there's there's a number of times that I see that an associate I talk to says that they're going to go into partnership, or that the owner of the practice has told them that they will look at them at some point to buy in. Partnerships are great if they work. A lot of them don't, and so one of the things you need to do is if you're going to go into own, as an associate, buy in. Make sure you sit down with the owner, go through all the different nuts and bolts about how that's going to work. And then you need to structure something legally because there's a lot of times there's a lot of handshakes, and those handshakes don't turn out positive in the end. Or after a while of working together, you find out you can't work together. State Dental Association websites, that's what I was going to tell you earlier. Those also have listings, study clubs, um, what to look for in the average practice. Um, the 650,000 in collections, 67% overhead, a 91% collection rate, 3 full days of hygiene per week, one front desk, two assistants, and one hygienist. A dentist that's probably 64 years of age, and 10 to 15 new patients a month. Ideal practice if you can find it. Um, 60, again, ideal practice 65%, 10 to 20 new patients, 25% of patients on recall, 1,500 active patients. Um, Active patients is an interesting one, and a lot of different softwares will show different numbers for patients as active patients. So what you're really looking at is patients seen in the last 12 to 24 months. Upward trend in growth, 10 to 15%. Sometimes, again, we'll talk about that a little bit more. This is the ideal practice. Remodeled within the last 7 years. Seller willing to stay on for a period of time. 4 operatories with room to grow, not 8 ops. And a lot of young dentists come out, and one of the things I hear from them is, I need 6 to 8 ops. I typically ask why, and they typically will say, well, I've been in a DSO, or I've been in a group practice that has that many, and I think I was told I need them. Really, 8 ops is way too many to, unless you were looking for having an associate work with you, or a couple of associates to work with you, or multiple hygienists. Um, 8 ops is a lot. Staff production of 20 to 25,000 per staff member. This is the ideal. Let me go back to that. That's the ideal practice. If you can find it, make sure you get to Matt and let him know you're ready to go. Ideal GP benchmarks, new patients, 20 a month. Production, 25 to 20 to 25,000 per staff member. Total overhead, 63% or lower. Staff compensation, 25% of total collections. The rent, typically 7 to 9% of collections. Marketing expense, 3 to 5. Your lab fees, 5 to 7. Dental supplies, 6%. Office supplies, 1. Office space, 325 square feet per operatory. Hygiene, 1/3 of the total production. And collection rate, 90%, 98% or greater. Those are ideal benchmarks. Doesn't mean that if they're not there right now, as you look at a practice, that it's a bad practice. This is ideal. If you find it again and you see these numbers, you're walking into a perfect situation, to, to move forward. Steps to purchasing a practice. First one is locate a practice of interest. Well, how do I do that? Well, find the geographical area you want to practice in. The type of practice you want. Is it cosmetic, a GP? Is it Medicaid, ortho? What size of practice, production, and number of operatories? First question I I typically ask a potential buyer is tell me what you're looking for and give me the kind of size of practice you're looking for and the number of operatories. That helps to get started because the, at least I know from a broker standpoint what you're trying to look for. Typically look outside your non-competes, even though Colorado, the non-competes are not enforceable. Look for good demographics in the, areas that are in, good growth, maybe areas that you want to grow. Um, sign, once you find a practice, let's go back. Once you find a practice that you have some interest in, now what do you do next? The next one would be you sign a non-disclosure, and the non-disclosure basically is going to allow you to requires you to not talk about the practice. You're going to get once you sign the NDA, you're going to get from a broker a prospectus and some information about the practice. The non-disclosure basically just says that you can take that information, look through it, but it is confidential. So it isn't for you to share other than your advisors or who's helping you with the sale going forward. Some brokers, when you sign NDAs, they have a blanket NDA for all their listings. So once you sign one, you're good to go. At Omni, our attorney asked us to get a signed NDA for each listing. And the reason why is we want to be able to go back to our potential sellers, let them know how many different inquiries we've had. Penalty could be damages to the practice. Again, that has to do with once you're provided and you sign an NDA disclosure and you're provided information on that practice, it is confidential. And it's confidential, uh, not to be shared with anybody you're working with, any employer. It is confidential in the nature of that practice sale and to you one-on-one. Term is until a practice sales. So once the practice sells, you're clear. You're free of the NDA. Receiving information, you're going to get the practice prospectus that I talked about, which is going to provide financial information, history, procedure, production, staff, and statistics on the practice typically. It's going to provide lease information, may be also included. A little bit about leases. What you need to really be looking for as a buyer is look for a clause in that lease called a tear down clause. If there's a tear down clause, you need to be very careful because what that lease says at any time the landlord could basically invoke the tear down clause if they were going to um, basically sell the building and it was going to be demolished. Oh, and they, build high rises there. Um, it happens more than often than you know. Exclusivity for dentistry in the building or complex can also, also apply to procedures such as ortho. So make sure that you're finding that you can you can practice the type of dentistry in that building because I can't say that big word today. Um, but if you do ortho, you're a GP and you do some additional ortho, make sure you're not doing something that's you're restricted to. How many years left on the lease? Kind of critical because, again, um, typically you're going to want to know, is there 2 years left on the lease? Is there 3 years? And I'll let Matt kind of talk about the lease requirements to get a loan. Um, but you want to know how many years are left on the lease at this point that, sometimes there's 6 months left on the lease, or could be a year. You can renegotiate with the owner or the landlord at that point. If the owner of the real estate is a dentist, one of the things you want to discuss is an option to buy or the right of first refusal in the agreement, the asset purchase agreement. That gives you the ability to make sure that at least you have, first right of refusal to buy that space that you're going to be purchasing the practice in. Who is the property manager? If it's not the dentist, who is the property manager or landlord, and are they easy to work with? Typically, the seller of the practice is going to be able to give you real good insights to who they are and uh, contact people, because you'll need to, once you make an offer to buy the practice, you'll also need to work with the landlord to get a new lease or take over the existing lease. Expansion potential, take a look at the space. If there's ever expansion opportunities, to maybe take on more space, or is there potential expansion within that space that you currently have? Those are things that you probably want to make sure you're aware of as you're looking at different opportunities. Visit the practice. This is probably one that I need to make sure that, as a broker for the sellers, I get a lot of feedback from sellers that they feel kind of, when somebody comes in to look at their office, they get feedback that they didn't like this, they didn't like that. It's got outdated, carpet, or outdated chairs of some sort, that, and a lot of buyers are working in different DSOs or in other practices where there may be newer equipment, and they come into a practice that a dentist is now retiring after 30, 35 years. Um, there's a lot of things you can change in a practice. So make sure, one, you're respectful. If the dentist is there by chance, typically, most showings that I would do as a broker, it's typically, I don't have the seller dentist there to see the practice. So when you're there, that only comes down the road once we go under what we call a letter of intent, and we do due diligence. So, but if they are there, be very respectful. If you do go under contract, just a word to the wise is, make sure that if you're communicating what you would like to see or would like to request, it isn't a tell, it's more of a asking, more of a could I get from the seller some additional reports to look over, versus I want. And again, sellers, they're selling their practice. It's been something that they've built over time. They have a lot of ownership in, and they feel that, that's has been part of their family. The staff has been part of their family. So they, a lot of times they'll feel a little disrespected if they're being told what to do. From the outside, how is the signage and visibility? Take a look, make sure you see that when you're visiting a practice. Is the practice dated? How is the layout? Um, is it functional? How are the ops functionality? How's the equipment? Is it older? Technology? Does it have, updated technology, or is that something that you would have to probably update? Expansion possibilities. There's a lot of times there may be a 3-op practice for sale, and you look at it and it could expand to 5, but the dentist that's in it only has 3 functionally um, that he's using at that point, or she. Issues that can be fixed. So take a look at when you look through a practice, there's a lot of things that can be fixed. Old dental chairs. Well, guess what? New dental chairs are, 5 to 10 grand. They can be fixed. Digital technology, that can be fixed. Basically, as you look at highly paid staff, well, if they're overstaffed, then you can reduce staff. If they have no hygienist, you can add a hygienist. Um, a lot of watch procedures when you go through and you take a look at it at the charts. And again, you'll want to, as you go under a letter of intent. Now, when you visit an office as you would like, you're basically visiting it and you haven't signed a letter of intent, you can't go through the computers. You can't go through the charts at that point. The only time those we become available to you is once you go under a letter of intent. But again, you can look at procedures. There's procedure reports, production by procedure that you can see before you go under a letter of intent. Um, if the lab bills are high, basically from the P&Ls, all those you can find a new supplier. All those can be things that you can change. Things that you can't change, overtreated patients, high rent. If you're locked into a lease that you're going to be taking over that's basically already high and it's going to escalate, you, again, you can't change those until your lease runs out. Bad location, bad floor plans, overvalued practice. You can still offer a lower price. Just remember, some owners think their practice is worth $1 million today. It might not be, but that's what they feel. A number of competitor dentists in the area. Tell you again, as I talk to buyers that are looking at listings that I have, a lot of them want to be in the metro Denver, you know, area. There is a lot of competition. There are, you know, a lot of different opportunities that are outside of the Metroplex. Um, so always, be open to looking at, where you want to locate, and what the competition is in that area. Once you find a practice and you're ready to move, you want to prepare or sign a letter of intent. Typically, the seller broker, I typically help with the buyers. I provide them with a letter of intent that is pretty much filled out. Then they can from what the offer or what the listing was, and then the buyer would then make any modifications as to the offer. Um, in that letter of intent, you're going to have some different um, non-binding aspects of it is, again, offering whatever you're going to offer for it. But it's going to be contingent on some you doing your due diligence. I'll get to that in a second. Then the 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 letter of intent is non-binding until you basically move forward from what we call um, the due diligence and getting your financing and making sure you've got a lease. Once those are basically solved those, then you would go to an asset purchase agreement, which is the binding of you moving forward to purchase the practice. The only binding aspect of a letter of intent is one that we mentioned earlier, is that is confidential information. So again, it needs to be held confidential. The second part is the buyer and seller are both bound at that point not to be looking at other opportunities. And so that aspect is also binding, that basically the seller takes the practice off the market at that point. It's under contract, and the buyer then also refrains from going out and getting new listings. Rule of thumb, case study. Well, it's not a case study, but it's just which would be the better ideal practice. A practice producing $1 million with a price of 700,000, or a practice producing 800,000 with a price of 700,000. The $1 million practice has an overhead of 85%, taking home 150,000. And the 800,000 practice has a 50% overhead, taking home 400. Well, it's the 800,000 practice is a better deal with all things being equal, because even though the value is 87.5% of its annual production, it's taking home $400,000. So I get a lot of requests for, I need a practice producing $1 million. The question is why? A lot of times you want to really look at what is the profit margin of that practice, and again, I'll let Matt get kind of what the bank is looking for from that perspective. Also, is it cash flowing? Due diligence, go back to the practice with your advisor and spouse, as I talked to you before. When you go through basically due diligence, and then you've signed a letter of intent, you're going to review charts. You're going to go through, take a look. Most of those are on the computer, but again, I can tell you that a number of offices that I've worked with lately, great offices, they're paperless to a point, but the doctor still wants to see the chart. He writes in the chart, but all of it's uploaded to charts. So again, don't be surprised if you see charts in an office, because there's a lot of older dentists that still want to see that chart. But go through and look at a number of different charts from, randomly, either through the computer or the paper. What you want to do is review the x-rays. Go through the equipment. The selling dentist will be there at that point. They'll turn on all the compressors. They'll show you how those are turned on. They'll show you that equipment. You'll go up and get to go through each op and go through the equipment with them at that point. Advisors gather more data to perform the practice analysis. If you're looking for additional information on the system or reports than you were given up front, you can always go into that software at that point and look at that data while you're in doing due diligence. Have questions developed that you want to ask the seller, because the seller's there. They're going to be there to answer questions about the practice. They know the best and all about what's gone on in the practice, how it was built, and a lot of input to patient base and staff. So have your questions pre-designed so you can ask them as you go through the due diligence. After meeting with the seller to discuss outstanding, again, philosophies, you're going to want to maybe meet potentially with the seller to discuss additional questions, philosophy staff. Typically, after the due diligence, most of those are put into question form if you didn't get that within the on-site visit. Once you feel comfortable that you've got all your questions answered, you looked at the practice, you see the pros of the practice, you see the things that you might want to change in the future. Um, Again, equipment. You can always change equipment, again, and update that. Um, but again, if you see it's a great practice and you want to move forward, then what you would want to do is you're going to move forward. You're in a letter of intent. You'll want to have what we call a purchase agreement put together. Typically, the seller's attorney will prepare that. I it, it depends on what broker you get and what buyer you get, but some buyers' attorneys want to prepare the purchase agreement. Just work it out between, the broker and have an attorney prepare the asset purchase agreement. Both buyer and seller will need attorneys as they go through the asset purchase agreement. Don't do that. Uh, I would recommend that a buyer have their own attorney to review the practice sales agreement. I call it the asset purchase agreement. The common components included in that are going to be, they're listed here below. Um, the rework clause, employment, non-compete, non-solicitation. We could be treating family members in the future, accounts receivable. Accounts receivable are not included in the purchase of the practice. They're separate. They're separate from the asking price of the sale of the practice. So if you see a practice selling for 500,000 and the receivables would be separate and maybe they're 40,000 in receivables that would be sold uh, outside of the practice sale. Use of the seller's name, list of equipment, leasehold. Those are all components that are in that asset purchase agreement. We won't get into too much of that. Your attorney will definitely give you a lot of insight to the asset purchase agreement. The cost of delaying the purchase of a practice, why I put this up is I had a dentist come to one of our seminars, waited a little over 6 years to finally buy a practice. And we ask, why now? And the, the dentist, she said, I just had to make the leap of faith finally to make a decision. And we said, okay. We showed her a practice 6 years earlier that's was pretty darn similar to the practice that she's going to buy. And we kind of let her know that if she'd have done it then, she would have been 6 years into owning the practice, have equity in the practice, and almost be 60% through paying off the practice loan. And she said, yep, it was just she couldn't make the leap of faith. So um, make sure that you don't end up cost of delaying. The average practice owner makes 20% more than the associate. Average associate makes 175,000 a year. That's 35,000 per year in opportunity costs. Wait 10 years at 350,000 plus interest. It's approximately 500,000 in lost income. This doesn't include the equity that you would have gained in the practice. So find the right practice, but make that decision at some point. Once you find it, then make sure that if it's right, make the decision. Cost of delaying is going to be there. And guess what? Celebrate once you actually get into a practice. All right, so with that, it's a real big overview of what we typically will do in our sellers um, seminars. We go a little bit more in depth than that. But um, again, if you have questions, you can put them in the chat. I'm going to introduce Matt Crooker with Bank of America. One of the things that you need to do as you're out there looking for practices or going to be looking for practices is listen to Matt today, but make sure my end, from a broker's end, standpoint, the first question I typically will ask a buyer is, have you gone to a bank to get pre-approval? And it's basically going to give you what you're going to need to look for when you're looking for a practice from a financing standpoint. So, Matt, with that, I'm going to let you kind of take it away.
Cool. Awesome. Thank you. Much appreciated. So I'm going to go through kind of where things are, where we think things are going. We'll spend quite a bit of time on talking about kind of non-loan stuff, but the things I talk to all my doctors about when we're on a call is like, hey, why do you want to do this? What's your goal out of it? What's your plan? And then do you have a team in place? That'll be a common theme. Like, do you have people that you trust that are going to give you the right answer? And then we'll talk about the loan specifically and what it should look like. We're certainly not the only game in town when it comes to dental financing, but we're a big piece of it. So I can help kind of give you the insights into not just Bank of America, but the market in general. But we included that Steve Jobs, great things in business are never done by one person. They're done by a team of people. Finding the right practice is no exception. And having people, again, like me or Kevin or whomever's on your team is huge because you can't do everything or know everything. So just quickly, background on me. This is my 15th year at Bank of America. Our practice group has been here 30, so I've been here half that time. Grew up in St. Louis, live in Colorado. My entire job is doing dental financing, primarily in Colorado and Wyoming. We'll do it a little bit elsewhere if our doctors are moving or something like that. But I live and breathe this on a daily basis. So I am one of the few people that can help look at a practice and detail a practice, and I will not charge you a penny to do it, whether it's 1 or 10. So it's all I do. Outside of this, I love volunteering. I love coaching. I have 3 kids, but that's kind of my passion. And then just a quick summary on Bank of America. Again, this is something we've been in the healthcare space for 30 years. We're obviously a huge bank. We do a lot of things. We've kind of carved out this small little healthcare sector. We will do close to $2 billion in dental loans across the country this year. So again, we know this. We specialize in it. We breathe this every day. So we think of ourselves as experts. I mean, we know what we're doing with it, but again, it's just part of building your team and figuring out who should be on your team. Okay, so how do you prepare? On that next slide, it's going to show basically, what things are looking like today. And student loan debt is huge. And we talk to sellers, and one thing I hear from Kevin when talking to sellers, like, hey, how the heck are we going to find a buyer to purchase my practice when it is so expensive to go to school? We expect it. Student loan debt's increased 230% in the 2000s and beyond, which is insane. We had a specialist, an orthodontist, that went to undergrad and residency at one of the most expensive schools in the country in California. She had $1.1 million in student loan debt, which is insane. And you're thinking, how the heck do you lend money to somebody that already has that much debt? It happens. It works. Not every practice is going to make sense. Not every startup is going to make sense for somebody with that much debt, but it's a whole picture and a financial picture of what they have. And she knew she had a bunch of student loan debt, and the rest of it was very reasonable. So again, it's not going to prevent you from doing it. We expect, unless you're extremely fortunate, expect people to come out of school with a good chunk of student loan debt. But that's part of strategizing and figuring out, hey, what does that look like? So again, going back to what's your purpose? What are you trying to get out of this? Is it being able to have the independence to do this certain type of procedures that you want in your practice? Is it financial independence? Do you want to build a long-term equity in a practice so that you can sell it in 5 or 10 or 15 or 20 years and have a big windfall of cash? Is it just, hey, I talked to a lot of new moms that, hey, I want to have a practice. I want to be a mom. I want to make my own schedule. Great. Awesome. Or is it, hey, I know I can do this better than everybody else, and I want to make an impact in my community. So there's a lot of different ways to slice and dice this, but that's really what we're looking for is, what does this mean to you and what are you getting out of it? And then in terms of strategies, it's figuring out, on that next slide, it's figuring out what are your goals? How do we create a plan? It's funny with all the AI talk, which I hear a lot of it and I ignore a lot of it. But the amount of things that you can do and type into a ChatGPT type of program and say, hey, here are the 5 things I want to do to own a dental practice, it will spit out something crazy accurate for what your plan could look like. And it doesn't have to be exactly right, but like you can do anything on those things now, just giving them topics. So there are very simple tools where you're not paying somebody $10,000 to go create something for you. There are tools that, hey, here are my priorities. Tell me how to do this. Part of that includes the financial goals. And then again, that biggest piece is just building the network of people that you trust. And, I'll go through who those people should be, but it's got to start somewhere, and bouncing ideas off of people that will tell you, hey, that's great. Or, hey, I don't know if you want to go down that path and here's why, but somebody that's going to shoot you straight and give you the truth. Again, this kind of ties back to where are you currently? What are your goals on the financial piece of it, which is clearly, on the banking side, mean a lot to us. But the 3 things that we'll talk through more than anything with every first-time buyer on that next slide, Kevin, are 1, what does your personal debt look like? So that includes student loans, and really, what does the repayment look like on it? Do you have a mortgage or are you leasing? A lot of times those payment amounts could be the same. So again, you've got a mortgage, you've got student loans, you've got a car payment. That's fine. Most everybody does. We need to find a practice that can support that. So example, somebody has, you get out of school and you make great money and you go buy, and these are, these are real life examples. You want to go buy a really sweet, awesome car and you go buy a Cybertruck and it is a $1,500 a month car payment. And you go buy a really nice house and that's another $8,000 a month mortgage payment and your student loans are a couple $1,000s. That's great. But we then have to find a practice that can support you and your family. So those that come to me with a lot of debt, it's not like buying a house, because if you come to me with a lot of debt, I'm going to tell you, hey, we need to go find a larger practice so that it can support you rather than looking for a smaller practice. People that have done pretty well and lived pretty frugally and don't have a ton of debt have more options than those that do. And again, that's fine. There is a practice out there for everyone. But my first conversation is helping you all strategize for what practices you should be looking at. So that's debt. Liquidity on there is just, again, how much money you have in the bank. These loans, and we'll go through it, but these loans, you don't need to put any money down. If there's real estate involved, maybe not. There's 5 different scenarios on those. But if we the bank are going to lend you $1 million to go buy a practice, do you have something set aside so that if everything shuts down, COVID happens again, do you have money to pay your employees, pay the loan, keep the lights on? If the practice was shut down for 2 weeks. So we are not going to give a whole bunch of money to somebody that has $5,000 in the account, because if something happens, they are in a world of hurt. So we're not going to take a risk and help you take a risk, but we're going to do it within moderation. I mean, again, the risk on these are so low. And then the last thing, which is a big piece, which is the production number. So again, going and looking at a practice, one of the first things that you should be asking when sizing up the practice is what sort of production is the seller doing, dollar amount, because we want to make sure, look, if you historically have been able to produce $50,000 a month at your practice and you go buy a practice that is doing $100,000 a month in doctor production, one, can you keep up with it? And two, in a worst case scenario, if you had to hire somebody to come in and make up the difference, can the practice support you hiring somebody? We'll get into the weeds a little bit on types of procedures. Like if it's a practice that does primarily implants and you're not comfortable doing implants, clearly that's, one factor. But for the most part, our doctors aren't looking at practices that they can't go in and really produce right away. So first time owner for us, these are very generally what we're looking for. So 3 years out of school. Can we do 1 year out of school? Yes. Can we do 10 years out of school? Yes. Most of the time, we just want to see that you like dentistry, you can perform dentistry, and before you go and buy a practice, you know what you're getting into, which is why that 3 years is generally the sweet spot of I'm out, I've seen what I really like, I've seen what I really hate, I can do this better, I want to go buy a practice. Again, earnings goes back to production levels. So that's, income earnings is very subjective. The type of practice you're in is very subjective, but that goes back to production. The student loan number, I'm not as worried about that. Again, it's more of what does the payment monthly look like than what is the total loan, the total student loan dollar amount. I think something changed today or yesterday, and I haven't seen it yet or talked to any of the attorneys about it, but that's a moving target anyway. Personal debt, again, we expect you to have it. Can your personal debt be taken care of by the income of the practice? And ideally, I always tell people that ask, hey, I've got $50,000. Should I pay it down towards my student loans or should I pay it down towards my house? We would rather see you have money in a bank account than go aggressively pay down debt, with the exception of credit card debt. It's high interest. It's putting you in a bad position most of the time. Where I see the exception is, hey, 0% for 7 months and we went and bought patio furniture. Great, cool. Not that big of a deal. But carrying big amounts of it on a monthly basis is generally not in anybody's best interest. But before you go do anything with a big amount of money, talk to somebody, talk to me, talk to somebody like me, so that you at least know what you're getting into, because it's harder to unwind some of those things. And then cash savings, just having, again, something set aside. I don't really need to go into positive and negatives. I think Kevin did a good job of why owning a practice is beneficial and the downside. I work with plenty of people that do startups as well, and it's sort of the opposite. But going into it, or you should, or that's something you need to figure out, what path makes the most sense for you based on what those goals and priorities are, both financially, but even more important, personally. If you think you want to do a startup and you walk into a blank space and you can't imagine spending, $700,000 remodeling a blank space and starting from zero, startup's probably not the right move. Also, if you've been looking at practices for 3 years and you're trying to find the perfect one, but your laundry list of requirements doesn't get met half the time, maybe a startup is the right call for you. But again, that goes back to that's the soul searching exercise that you need to do before you get too far into any of this. The team could be these 5. It could add 5 to it. I would argue that you just need people that understand the industry and will give you good advice and know what they're doing. My best friend is an attorney, and he's a real estate attorney. He does not work with a single one of my clients because he does not understand the dental industry. Understanding what we do, especially for an attorney, if they're looking at a contract and they don't know what they're looking at, one, they're going to take way more time, which attorney's time is money. And two, it's going to be a terrible experience on the seller side if your attorney is trying to ask for things that don't make sense in a dental transaction. But there's plenty of people, there's plenty of people in every state. So I live in Colorado, but if you come from a different state, that's totally fine. There are people everywhere that do a really good job, and it's ask for an introduction to whomever it is, but it's people that you need to trust. And this isn't like the good old boys club or good old girls club where we all just work together because we're friends. People that don't do a good job get kicked out really quickly because our reputation is on the line, that if I refer an attorney that does a good job in the dental field and they drop the ball, it's a reflection of me. So that's why you'll find so often, hey, you should talk to so-and-so, because people want to surround you with the right people. That's honestly how I feel, and that's honestly how it works. And the bad ones don't stick around for very long. So it's a good thing. It's a very positive thing, but that's just kind of the way it works. So the loan specifically, things that you should look for in a partner. These apply directly to the loan, and then I'll talk about kind of the banking aspect of it too. This should be the best deal you get on a loan, mortgage included, car loan included. You put no money down, again, 99% of the time. If real estate's involved, then maybe. The fees should be extremely low. You're not putting up your house as collateral. You should be getting a 15-year term. Like rates right now, to give you an idea on buying a practice, are conservatively like low to mid 5% range. Mortgages are still, my understanding is 6+%. Buying an auto loan is 6+%. Like you are going to get a great deal. The harder part is finding the right practice and finding the right banking partner. There are plenty of us that will lend you money to go buy a practice, and it's making sure, again, the partner that you choose in your bank is the right one. And if it doesn't include all of this stuff with it, you're probably not talking to the right bank. Just candidly, you should get an awesome deal and feel very good about all of this. And then on that next slide, it really talks about and should boil down to what does the relationship look like? Because at the end of the day, the loan is going to be a very small fraction of the time that you spend partnering with the bank. And so again, is it, I want the ability to grow and buy or start more practices. If that's the case, great. That's very important for you to let us, the bankers, know on that end. But people want to have everything in one place. And if somebody's offering you a really low interest rate compared to somebody else, there's a gotcha moment at some point in time, because you will be charged for it in another spot. So finding a reputable partner that can do all of this and help you run your dental practice, because for the next 5 to 10 years, you're going to be a partner in this. And if they can't help you run a very smooth and efficient financial aspect of your practice, it's probably not the right fit. Again, I will say it, I've said it twice or 3 times already. You're going to get a great deal on your loan. It's making sure that you have a relationship with somebody like me. It doesn't have to be me, but somebody like me, and a bank that can just make this whole thing easier for you. I want to hit on, so Kevin touched on a lease or real estate. So yes, you can buy a practice and buy the real estate. There are, again, times where you may need to come with a down payment. There are times the practice may be able to take care of that down payment. There are times we may need to ask the seller to help with a note on the down payment. Again, there's lots of ways to look at it. From a leasing standpoint, which is the majority of the time, this is a Bank of America thing. We need at least a 5-year lease for you to be able to be in that practice and in that location for 5 years. The reason why, your ability to move and relocate will be based on the equity that you have in the practice. So paying down that loan for 5 years should give you at least a starting point and a sufficient amount to be able to go and remodel or change locations and update equipment and things like that. But again, very doable. So if your goals are, I want to find a practice with real estate, or I just want to be in this specific area, just communicate it. That's really it. But it's a great industry to be in. And the reason we do so much in this space, and we'll do close to $2 billion in dental loans, is the default rate is almost zero. I mean, you guys run great practices. It's a great industry to be in. It doesn't mean we're doing every single deal, but there is a ton of value from a bank's perspective on being very in-depth into being a lender in this space, which is why I do what I do. And it's such a little small piece of our overall pie, but it's literally my entire job. So reach out, strategize, and just make this an easier process for you overall. But think that's it from my standpoint. And I don't know if there's anything I missed or you wanted me to go into more, Kevin.
Let me get out of sharing and I'll see if I can get this in slideshow. It'll let me. All right. So are we back to our main slide yet? It'll let me do this. It's hiding my toolbar, Matt. Let's
If you
see.
hit the share button, if you just click that share button and probably stop sharing, then it'll just bring up.
Yeah, I can't get to the share.
Should be at the if you just there we go.
And there we go. Gosh, smarter than the average bear. But so the one thing I want to point out is Matt talked about basically this is a great industry to be in. Dentistry, this is my 40th year. So I've been in the dental field for a long time, and again, one of the things I can tell you is dentists basically, succeed. They do very good work, and finding the right practice is what we're all about. I typically represent sellers, but having Matt as a partner out there, there's a number of different banks, but one of the things that I know when I'm working with Matt is he understands dental practices and inside and out, and he's going to be right up front with you. He's going to be a partner that's going to help you through what you need to know to get a loan and to move forward, not only through the transaction, but after the transaction. So again, Matt, like you said, there's a lot of us out there, but I just wanted to give a little bit of a pat on the back. Bank of America's done a great job in the dental industry, and I find that there's no surprises down the road, and that's great for me as a broker representing a seller because you don't want to get through 80%, 90% of the deal and then get a surprise. So um, let's see if we've got any questions in the chat. Um, let's see if I got any questions here. I've got one. It says, I think you already answered it. What does the bank need to get a pre-approval of what I could qualify for a loan?
Yeah, so I guess my term is always pre-qualification because pre-approval, just like Kevin went through that example of the $1 million practice versus the $800,000 practice, you could have two of the exact same size practices, but if the income is significantly different, it's going to be very practice dependent. But going through those three main things, which are production, liquidity, cash you have set aside, and debt, I am qualifying and pre-qualifying our buyers before they narrow something down to say, hey, you should be looking at X size practice, this range of purchase price, this range of seller production. And then really once you have a practice, then the quote unquote pre-approval is very easy from there because we can take the income and compare it to what you need to, again, support the practice, support the loan, support your families. So yeah, it's a conversation for sure that you should have up front because like Kevin said, every broker is going to say, what bank have you talked to? Because they are making sure their seller's time is being spent the right way.
Which is a good way to start a practice. Either identifying location and build out or purchasing a practice already built out.
I mean, that again, I think that goes back to that soul searching exercise of what do you really want out of it? If you like the idea of you making every decision of what it looks like, where it's going to be, what your staff, who you're hiring from the startup generally makes sense. But you have a runway of a 6 to 9 month build out, and 1 to 2 years where it's a grind, and you're probably having a part-time associate job on the side. But if you like the idea of, hey, I want to own a practice, but I want some sort of financial security, that's when you go put together your hit list of, I'm going to look at practices and I need these 5 things in order for me to move on one, but you're not going to get everything. So that's the trade-off. But the risk, and I guess the risk tolerance of both, they're both going to be very successful. We wouldn't do it if you weren't going to be successful, but from a financial security standpoint, it's a much different runway of, hey, I'm going to buy a practice and I have cash flow day one, versus, hey, this thing is going to take a couple of years. And if you're okay with that, those could be so lucrative.
Yeah, just to add to that, there's a number of practices out there, and brokers have them, that are basically the seller is kind of slowed down. They're basically practices that have been there for a number of years that you can go into. They're already built out to a dental offices. And again, from the seller standpoint, he's not selling it based on what could be. He's selling it as maybe a build out at this point. So look for those, and typically what you'll be looking or saving is what Matt said is it's $200 to $250 a square foot to build out in today's market. So you've got 700,000, and now you basically open the doors and maybe have 3 ops, maybe 4, no patience. And so yes, it's going to take some time to build. Can you do it? Yeah, they've been done before. Um, but when you can go into a practice and basically it's built out and all you need to do is start updating some equipment, it might have a few patients with it. You can get it for a much reduced price, and you can be off and running and kind of changing things as you go. So look at those alternatives. Uh, Again, they're there. They're both accessible. They're both opportunities that you can go. It's just a matter of there's a lot of work in the build out from, for a new dentist. Um, should I buy real estate with the purchase of a practice? My
Man,
feeling is I'd say yes, Matt.
yeah. I mean, if it's available, not everyone's going to have it. If that is a non-starter that it has to have real estate, you're just going to have a smaller pool of practices to look at. But uh, I mean, there's not much of a downside. Generally, the payments are going to be close to the same whether you lease or purchase anyway. And if you can build equity in both a practice and the real estate from the start, again, fast forward 10 years and your, overall net worth is significantly higher. It's awesome when it's available. But it's not always available.
I think we've answered the other 2 questions. How do I find a practice in a certain area? Again, I think, you look at brokers have listings. You can look at your dental associations. Um, Dental Town has basically a list of different listings out there. I don't think that they have all of them, but the best ones are usually the brokers. They're typically going to have a list of all the different practices within your area. Just all you have to do, like Matt said, is get on the computer, look for brokers in that area. Um, and if you don't know how to do that, um, give me a call. I'll give you, information on what we do, but I can also provide you with other brokers that are around. There's a number of us. You need to find the right practice for you, and some brokers may have different practices that may meet your need versus the ones that the other ones do. So I think, we want to make sure it's kind of matching a seller with a buyer is what our job is as a broker, making sure that they're a good fit, and then turning them over to the other industry experts and the attorneys and the bankers to kind of walk us through to close. With that, I think we've answered the questions. Anything else coming up? I don't see it. So with that, Matt, any last things from your end?
Nope. Thanks for doing this. Thanks for putting it together. Thanks everybody for showing up. And again, reach out to either one of us with whatever questions you've got, and we'll be here to help.
Thank you, Matt. Thanks everybody for attending, and you guys take care. Have a great weekend. Bye-bye.